Day. The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host who comes to you at this time, most times.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on? Well, we're up 25 points on the S&P cash. Groundhog Day again. Market opens. Everybody's a sourpuss. They all decide to throw their short money at the market in the morning. By the end of the day, they pretty much have to cover. Sometimes we're a little higher. Sometimes we're a lot higher. Sometimes we just gap higher. NASDAQ's up 70. Dow 315 higher, and like I said, let's call it 25 points higher on the S&P cash. So what happens here? Well, I thought maybe we had a chance to make a high on Friday, but we went higher. Volume was boffo, and where I'd seen the highest amount of shares shorted ever on Thursday, I thought, well, maybe it matches it on Friday. It didn't only match it. It went bonkers. People are literally rabid, foaming at the mouth, bearish in the market to an extent that we've never seen before in all recorded history in the stock market. We went from what was pretty high, even on the down days, of 2.5 billion shares short back in March on some days, to getting back to about that 2.5 billion share mark early last week, to see 3 billion on Thursday, and a whopping 3.5 billion shares shorted on Friday. The problem is that those shares have to be bought back. It makes the float a little larger, but we've chronicled one of the things, let's call it a master class in short selling, and that is it has to be covered. And we talked about this with DRYS, D-R-Y-S. You can go back and dig it up. But it went from $4 to, I think, 87 or 92 or something. I'd been watching it. I knew what these guys were doing. They kept on doing reverse splits. But they got enough of the shares themselves in a margin account and then moved it out of the margin account. All those shares have to be covered within 3 days after that, leaving the margin account. Now, that's how you get a stock to go from $4.50, like DRYS, to 99 and whatever it was, or 87. 20 times faster or higher in a matter of a handful of days. The problem we have today is everybody's that freaking nuts. They are absolutely bat crap crazy on shorting the market, and they're not giving up. I don't think they're going to give up until they're out of cash, until they're broke at this level. I have never seen anything like it. I spent most of the weekend looking for any kind of evidence that it had ever happened before. Markets have always topped on exuberance, on irrational belief that the markets were just only going to go higher. I've never seen a market actually top out with people being as bearish as they've ever been in all of recorded history in the stock market, at least the U.S. markets. So we're in a position that has never happened before. Generally, everything that I've ever witnessed in the market has happened before. This has not. That is, we're in this feedback loop of no one believing that the market should be here, everybody telling everybody that it shouldn't be here. There's no reason to believe that it should be here, so therefore it's going lower, and all it does is go higher. And my guess is there's probably people in the market already doing the moving their shares out of margin accounts into non-margin accounts, so that those shares have to be covered. In case you're new to trading, if you short a stock, you have to borrow it from somebody. The only way you can borrow it is if it's in a margin account for allowing your long positions to be loaned to other people. You can borrow more to buy stocks that you like in your account. If you get out of that and say, hey, I no longer want to be on margin, you have to return any and sell any shares that you bought on margin. If you shorted stocks by pretty much by rote, you have to be in a margin account. So we've got this kind of, let's just call it a tug of war on both sides to drive things better. Well, at some point, if you get too many shorts, all the people have to do on the other side is just sit down, put their feet in. They don't need to drag you across. All they need to do is make you sit there until you get fried. And if they want to, they can be doubly mad by actually taking those shares out of the margin account, which makes you absolutely have to buy. There's no doubt about it. You're going to get a notice that says you have to return these shares now. Doesn't matter how horrible and on what side of the market you're on, you have to buy them back. And with many stocks, when I checked this morning with my broker, many stocks unborrowable, I suspect that's exactly what's going to happen, is that either they're going to do it all at once or they're going to do it slowly. But they're going to pull these shares out of margin accounts and make these folks that are way on the wrong side of the market cover. And if they do it all the time in all the big stocks, it's going to be the short squeeze of all time. And my guess is it may last for another 100 years because we've never been to this level before. And generally, you don't have retail traders going this deep into being short the market. But, maybe the numbers are not true. Somebody said blame it all on Robinhood traders. I don't know if you can. I don't think they have enough money. The real money is, of course, people on the street. So I suspect there were a lot of people that missed the down move. They missed the up move. And now they're trying to catch up. And they're trying to catch up by making massive bets on lower stock markets. And the only thing that these hedge funds are going to do is probably go broke. I would not be surprised if we start seeing over the next week or so stories of hedge funds going belly up. And that's kind of it. It is one of a market that almost every time someone can say it's different this time. Well, if it's actually different this time, I don't know what you can do. No one's been this short at the highs end of a market ever. Be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Then it's all just a little bit of history repeating.
On this day in, let's turn that up so I can hear myself a little bit. On this day in 1978, he said, the Intel introduces the 16-bit 8086 processor with clock speeds of 10, 8, and 5 megahertz. The 8086 would become the basis for the series of processors used in the IBM-compatible PCs, and the x86 family, later marketed under the name Pentium, and now Core and all that stuff, would dominate the market in the PC area. This is, of course, is it 42 years now. However, it was a modified 8-bit 88 processor. It was used in the original IBM PC, so they could address 16 bits instead of 8 bits. Still a for the time, very good. When we look at it today, a mere pittance of what is necessary. Of course, they eventually, I think, 1981 came out with a 8087 coprocessor for it. That is to do complex math. And I think probably if you're not interested in electronics, spend a lot of time in programming, you're really not understanding what floating point math does. If you make one calculation, probably not a problem. But if you make iterative calculations, it becomes a problem. If you're trying to find the diameter of of something, you just multiply it times 3.14159. I used to know it to a lot larger digits. But that continues on for always. So no matter what you do, there's going to be a little bit of error. The problem comes in calculating things like interest, where every single day it has to be recalculated, and that error continues to build up. The 8087 processor, math coprocessor, was made to take care of a lot of the issues with rounding errors that would then compound over time. But a fairly decent design not much has changed. It's just been continually made faster, smaller, and the ability to address more commands over time. But you know what? I have one of the first IBM PC programs I ever wrote in C, compiled it, and it still ran on the machine I had today, 40 years later? Something like that. 39. So it is kind of amazing. I don't know of any technology where you could have had the same software run 40 years between when it was written and when it was when the product is still selling. But pretty amazing. Of course, eventually AMD got into the business of copying them. For consumers, much better deal pretty much to buy AMD. Question is whether Intel will ever get off its backside and start getting competitive in the retail market again. Let's take a quick look at Intel, then we'll get into some questions. INTC. And then we're going to get into some other stuff that I want to after I answer the questions. You know, you're up here, but there isn't a lot of juice. Again, I don't see a lot of push that makes Intel look like they're a great company. They really look like Microsoft did from about 2002 to about 2014. They don't think that there's anything giant going to happen with these folks. Okay, now back to the questions already in progress. Do you have spoken about the past when penny stocks are soaring that that's a sign a top is in? Yeah, there's a lot of signs that tops are in. The one sign that you need in short squeezes is that shorts quit shorting, because here's what happens and why you can ratchet the market up. And that is everybody gets short. The operator behind the thing decides to move his shares out of the margin account into a non-margin account. Everybody has to cover. It goes a little higher. They move all their shares back into the margin account. Suddenly, all those shares can be shorted again. Everybody starts shorting. They move them. They move the shares out of the margin account into the non-margin account, and everybody has to get out of the shares again. Not everybody, but let's say that you're a big operator like Buffett. You got a lot of shares. You own a big hunk of Coca-Cola or something like that. I mean, the easiest thing to do, especially with Buffett, who owns really the biggest options house in all of America, is just to sit there and do that over and over. Let people give you the cash. The problem is that if you want to be short the market, you probably don't want to have lots of people short with you. We've discussed this before. In fact, Buffett is, I'm trying to remember one of his comments, but it was always good. And he said, I'm going to look it up because I don't want to mess it up, because this is actually a fairly good one. I don't listen to what he says he's doing at the moment, but he does have some pithy comments generally down the line. This one is BEF. Come on. BUFF. Okay. I know it's in here. I'm going to find it. A pack of lemmings looks like a group of rugged individualists compared to Wall Street when it gets a concept in its teeth. Of course, this is a highly defamatory statement in respect to lemmings. And that is it. Everybody's got the idea the market's going down. When everybody shuts up about it going down, my guess is it will start going down. That's generally the way it works. Anyway, on short stocks, I don't think it matters. At this point, the only thing that really matters is if shorts quit shorting. They keep putting their head into the lion's mouth and getting it bit off and act like something else is going to happen. We'll see those numbers change. When it does, I suspect we'll have a pretty healthy pullback. But it isn't going to happen as long as you're here to feed the bear. And that's kind of it. Feed the bear. Maybe that's the name of the chapter of this market. Feeding the bear. You just feed him every day. And, of course, he'll come back and throw more. It's almost like degenerate gamblers now in Las Vegas. They can't not short. It happened this morning. First 15 minutes, I was going to say maybe 50, 60% of the stocks I was watching, the flags coming in on the trades showed short originations. I don't know what it'll be like at the end of the day. But again, everybody had to see that grenade, and they had to jump on it and let it blow up. And, well, they're not quite dead yet, but they'll go to the hospital, get fixed up. They'll be back probably trying to short the close yet again today. We'll be back.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I wanted to show you something, especially since this hasn't been a big issue for a long time. We've been up in an uptrend. But there's a thing called Reg SHO, and this is since I think 2008. It was one of the few things that actually got through that was supposed to fix the markets, supposedly. And of course, 90% of the stuff that Dodd-Frank was supposed to have done never actually got done ever. I remember a guy died, I think, but he looked like the terrorist in the Nakatomi Plaza building in Die Hard. The blonde, he had the same hair as the blonde guy, who was, I think, some kind of ballerina dancer kind of dude. Can't remember. He was in that, and he was in White Knights, and he was in The Witness, where he was an Amish dude. I can remember those 3 movies he was in. Anyway, this maybe someone knowing the den remembers his name, but I had him on a few times. I always ask him, when is all this stuff going to get done? And he goes, it's going to get done. Of course, none of it got done. So what was his name? I'll think of it probably in a little bit. Anyway, Reg SHO made public the amount of shares shorted that literally didn't have anybody to borrow them from. And sometimes it doesn't matter, like ETFs, they can just continue making new shares of ETFs. But they've got to do that. They've got to make new shares. Sometimes these guys will think that the market's going to turn their way, so they don't make new shares. They just let people short stuff that doesn't really even exist, and they think they're going to get wiped out, so that's it. So sometimes they go a little bit on the ETFs. But this list, which right now is a bunch of stocks that are weird, lets you know that these people are probably juggling dynamite. So there are a few ones out here that I think are very interesting to take a look at. The SMHs, we have the DSLV, which is the inverse silver. These guys are playing with fire in the fact that they're loaning shares that they do not have underneath to actually lend to. And this list of threshold list from NASDAQ is pretty good to watch, because in some cases, this is where you see a lot of people, once you get on this list, everybody else knows you're on it. They know you're probably on the wrong side of the trade. And it may be incredibly easy to chase these people down and out, and maybe even blow them up. As we saw in oil last, 8 weeks ago, where they drove everybody out and the price of oil to below and actually into negative territory. This is the same kind of thing. So if you want to see a market that's setting up like that, keep an eye on everything on this. If you want this link, email me at path@tfnn.com. Read up a little bit more on what the threshold list is. But basically, this is a list of people that have not been good. They've been naughty, and they're lending more shares than are actually available to them to lend. And again, on shares of an individual stock, it's one thing, but very problematic on an ETF, where all you have to do is actually create another unit of shares to put into the marketplace. But there's a whole list of these, and these are all stocks that only get on this list by having people short beyond what is actually there. As I'm trying to remember, it was in Jesse Livermore's book. Maybe I'll find it during the next break. But there's kind of like a little rhyme or something that they used to say on Wall Street, and that is, you're selling something that ain't yours. I'll have to find it. But it was kind of catchy. And, of course, really in the 20s, the ability for stock operators to squeeze people out of the market was rather legendary in pulling these games. But it was almost always on an individual stock. Now we have an entire market that's based with almost the ability not to be shorted anymore. Literally, you can't drive the stock down anymore. every share is out and shorted. Now, if you have a lot of cash, you're a big fund sitting fat and pretty, maybe you can weather the storm. But again, I bring up on Friday, Mr. Miyagi, best way to avoid fight, not be there. You don't want to be early to the party when everybody shorts. Anyway, I'll leave that up if anybody wants it. Email me at path@tfnn.com. But a good list to go shopping on if you're looking at stocks and saying, hey, maybe there's going to be a massive short squeeze, and I can cash in on these people that are probably on the wrong side of history, or histoire, as I like to say. I saw this first in DSLV, which is, again, the silver. So maybe there's something down here going on in silver, but keep a close eye on gold and silver, because I'm starting to see those show up in that list too. But that's interesting. Okay. What else do we have out here? Okay. I think some of the other questions was Qualcomm. Where's it going? Again, I don't think these stocks have done anything other than literally claw their way back higher on the backs of shorting it way too often and way too hard. You're at $90.74, pretty much at fair value. You hit $90, so maybe you go hit 100. But again, what I'm going to say is these stocks are probably only going to go higher until everybody quits shorting. And when they quit shorting and give up, it's going to be about 3 days why they make people sweat it out at the top, and then the market's probably going to roll back over and down. So we can keep an eye on that, but just know that right now, the way it's setting up, I'd more likely say that we are going to see a high after options expiration on the 19th. Yeah, 1, 2, 3. On the 19th or after. I don't think there's a lot of reasons to think that we roll over before then, unless we have some other kind of surprise. And so far, I don't know what else is going to come out of the woodwork, but my guess is that I don't think anybody in America can handle one more thing from the news depressing us. But that's just my thought. Anyway, we're going to go to the break. Make sure and give me a call at 877-927-6648. And I think that's about it. We'll be back in a minute. We'll go through some more charts.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And as we're back here, question about Apple. Do I see anything? The options show anywhere from 340 to 360 for options expiration on the 19th. Is there no volume up here? Yeah. Well, it's light. But again, I haven't seen the shorts give up on this thing. They were still on top of it yesterday in the first hour of this morning. I don't think, you had kind of a narrow window where maybe this thing might have reversed, but I don't see a lot of reasons to think this one is reversed. The one big thing that you can say about Apple is that for the last 7-8 trading days, they've at least laid off this thing. A year ago, short positions, 8-9% a day would be kind of a normal run rate. On Thursday, there was 18%, which is still, I think, incredibly high for a stock with $280 billion in cash. I'm going to say that again, $280 billion in cash, yet these people are shorting it. You short the weak, you go long the strong. So if you're thinking the market's pulling back, why not look for a stock that needs lots of cash? It has declining numbers and maybe is highly susceptible to anything that's going to happen in the future. The problem is that everybody's shorting these big stocks, and I think they're just going to get cleaned out before it ever turns around on them. I don't understand it. To me, there are a lot of stocks that have a lot of long-term problems. In technology, I see them all the time. Western Digital, a company that probably, got another 2 or 3 years in it maybe before it fails. To me, this one looks a lot better because, one, it doesn't spin off a lot of cash. Its products are lower margin. When I look at Apple making 60-70% margin on an iPhone, you might as well just say that these guys could counterfeit cash and would never get caught. But you're going to go after them and say that they're going to have problems. Well, if you can, it's almost, they call it a license to print money. You're almost in the realm of actually the same kind of margins that software companies have. Once they build it, really making a copy of it is fairly inexpensive. And if you do it right, maintaining the customer base is not that hard either. You fix the bugs, you write up a lot of documents on how to use the thing if it's tough. You write a lot of videos on YouTube. But, that stuff costs the same as if you have one customer or you have 1 million customers. Doing it the right way, doing the support, other than maybe phone support, is about the same. So, and if you're making 70, 80% margins on something, on software, you're doing pretty good. That's why, of course, Electronic Arts and some of these other companies are there, because once they spend the money to make it, that's it. Now, somebody is always pushing me toward distribution companies and other companies in entertainment. It's a horrible business, mostly because you're going to get a long string of duds before you hit another big winner. It just never seems to be that you're always in tune with the market for what people want in movies. And the budgets are not anywhere close to what the budgets are for something like Electronic Arts these days. But again, I think there are companies that have a lot of reasons to say that maybe they're going to roll over and go lower when the market does go lower. I can make a lot of cases. I may be wrong for it, but I can make some cases on why these companies would be weak. In the case of Western Digital and Seagate, their business is going away. They aren't in the business of making memory, and that's all that really these companies are these days, and hard drives are going to be shortly, is memory companies. They're just making memory for hard drives. Everybody buys the same handful of controller chips to put on a board that holds a lot of memory, and they push it out the door. So, again, it's kind of like people. I remember there were people that made a lot of money in the early 90s making videotape players for television stations and Hollywood and that stuff. I mean, these things were $200,000, $500,000 for decks that had magnetic tape in them and stuff of some kind, like a VHS, but high quality. There was a whole lot of stuff you needed to know to move everything at the right speed and do everything. Tape was analog. It was problematic. Even if it was digital, the way it moved and everything was kind of analog. There was a lot of black arts that you had to know, stuff that only you would learn after 20 years. A junior engineer can make a SSD. All the examples are there pretty much for doing it. Would they make some mistakes? Yes. But I think in a year or two, you could probably figure out all the mistakes they made. And you, too, can get into the business of making SSDs and other things. So eventually, I just don't think that there's, as the black magic goes away from Seagate and Western Digital, you got to think that these companies are going away, too. You know, for a while they'll be able to compete, but eventually the technology is just going to catch them like videotape decks. Can you even find one today? And all the people that knew all that, Panasonic and Sony, other companies like that, where are they today? Don't hear much about them. If everything's okay, why another package of money? Don't know if that's a question for me. I will tell you that, and that is to make sure that the shorts don't win. Do whatever it takes to get these people, because to an extent, the market is a confidence game. If everybody believes the market's going higher, it's probably going higher. If everybody believes the market's going lower, it's probably going lower. In this case, we've got a bunch of people, a handful of people, well, I wouldn't call it a handful, a percentage of people who all believe that the market's going to hell in a handbasket and they can't quit shorting. But, of course, if that was true, all the people that were long would be heavily selling into this. They are not. Now, when that happens, I think we probably hit a high. But at the moment, the only thing that does happen every day is the lion opens its mouth, the short sellers stick their head in, get it bitten off, which reminds me how much I actually like Christmas, because it's always been my the thing that I always loved to do best from the time I was young, and that is bite the head off Santa. The Santa with the cream filling inside. I'm going to say marshmallow filling inside. I always knew it was Christmas when I was able to bite the head off of Santa. We'll be back in a minute.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on growth.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Wow! David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And the last question, Dave, I know that you are clued in to what's going down there in Clearwater. I watched Donnie Brasco over the weekend. Not the best movie. It's an okay movie, but kind of far from the truth was my problem. But okay. Anyway, I see that the King's Point or King's Castle bar was close to you. Do you know anything about it? Yeah, they used because that was like the first year I moved down here, they were filming it. They used a steakhouse in the movie, so that's not it. I used to drive by it on my motorcycle on Sundays when we'd ride north. We'd come back down US 19, which is the big highway, but it's got, it's like a highway, but it's got stops every couple of miles, and it's like 6 lanes both ways. Anyway, it's up in Holiday, and a church had bought it after the mob had closed it. I think it was 81 or 82 when they arrested everybody from the mob in Brooklyn trying to come down here and start issues down here in Florida. But no, they moved the whole thing lock, stock, and barrel as a church over like a couple of blocks over, and the church owned it stuff. Now it's a giant like drive time car lot. And if you ever drive through there, there's a big car wash and truck wash. So you want to wash your big semi, you can, but it's just north of it on the east side of the highway. But nothing to come by and see if you want to see all the mob stuff. All that stuff's long gone, but the echoes of living up in Pasco County have not changed. It's a little bit rougher than down here in Pinellas, but it's like all places. Anyway, as always, what you want to do is sow when you can, not when you have to, and then come back tomorrow because we'll be here. Same bat channel, same bat time.